You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm Bill Powers. This is Mining Stock Education. Thanks for tuning in. And in today's show, I'm going to discuss 12 reasons to sell a junior mining stock. Plus, I'm going to share a $500,000 missed opportunity or mistake that I made a few years ago. So stay tuned till the end to learn about that. In this episode, you're going to learn about the answers to one of the most asked questions that I've gotten over the years, where listeners will email, sometimes asking about a specific company that oftentimes I know nothing about. Should I hold on to it? It's down 20%, or I'm up 200%. Is this the time to sell? But I've had multiple emails from listeners asking specific questions about selling a certain stock, but also just the general thought process that goes into selling a stock. So that is the topic for today's show. I'm going to discuss the three main selling categories, 12 reasons to sell a junior mining stock, and keep in mind that this is going to be a non-exhaustive list. As the saying goes, there's a million reasons to sell, but there's only one reason to buy a stock. You buy a stock because you think you're going to be able to sell the stock at a profit, a higher price at some point in the future. That's why one of the most bullish signs is when you see the CFO, who's often the most negative person at a company, buying stock. That's about your clearest for a retail investor. That's your clearest sign that you should perhaps take a look at a company or bullish confirmation for a company. But even executives could sell for a variety of reasons. Their daughter's going to college, they got a divorce, they needed to raise a little money for a down payment on a house. There's a million reasons why people may sell, but there's only one reason why they buy. So this is going to be a non-exhaustive list, but it's going to help you think through the thought process in your own investing of why you might sell and how you develop your sell triggers. And at the end, I'm going to share a $500,000 mistake or missed opportunity, and I'm going to explain the thought process that went into it and how I'll do it differently next time after self-reflecting and talking to some sophisticated people in the sector about that missed opportunity with their advice and my self-reflection. I'm going to play that differently next time. And that's what you need to do. You need to learn and you need to grow and be self-critical in a positive way so that you can handle situations and investments better in the future. Your advisor and you. I'm not an advisor. The disclaimer that I have for this show that's on the website, on every video since I started this 8-9 years ago, says I'm not an advisor and I don't know your situation. Also tells you that I'm biased and I don't know you. So even in pointing that out, that's the first thing we want to talk about, is that there's so many variables that go into selling. If you rely on an advisor, you got to realize that your advisor is biased as well. I'm biased, you're biased. We all bring our perspectives to play here. And I've had friends that are high net worth that have invested with me in recent years. And when they took some speculative capital, and I explained clearly to my friend, even though he is of above average means, I said, this is risk capital. We could make 30 times our money, or we could lose nearly all of it, or even all of it. So he understood that going in. And as he invested with me, his advisor was kind of like, what are you doing? And his advisor would watch. And if the stock was down, he would, point it out to him. And my advice to my friend regarding what his advisor was telling him was like, listen, this guy doesn't even know how to play the small cap speculative game. This isn't his forte. So his opinion is useless in that regard. Second thing, his own conflict of interest is he wants to have your money so he can make commissions off of your money. So that's his inherent conflict of interest. I'm pointing all this out to say, all the information you consume, whether it's through a YouTube channel, whether it's a written report, all of it is biased. It comes from a certain slant with certain interests that are not 100% aligned with yours. And if someone doesn't understand what we're trying to do with junior mining, stock speculation, their advice isn't going to be the best. But even if you get somebody that understands the sector, such as a broker, they have their incentives in terms of the deal flow that they get rewarded to present to you, or the commissions that they make. And even if you have been in this sector and you have a full service broker, and if you rely on them for deal flow, you should be discerning as to the type of deal flow. You should ask them questions like, how did this deal flow come to you? Was it through an existing relationship, or was this from the guys above you at the office pushing it down? What are the familial relational dynamics at play for why a broker would present to you a certain stock? The point I'm making is, if you're going to be in this sector and you're going to be successful in this sector, you must own your own decisions. So an idea comes to you, whether through a broker, a podcast, a written report, your own research, the chat rooms online, however it came to you, with a perspective and interests that are not 100% aligned with you, you need to be discerning, and you need to own your buy, and you need to own your sell. And so many people, when they're frustrated and then lash out at a sell, it's because they didn't own the buy of a certain stock that they lost money on. We're going to move on to the three main selling categories. The first one is for personal reasons. We sell for personal reasons. The second is macro forces external to the company. And the third reason is company-specific reasons. And this would deal with the specific investment thesis of the company, and are they achieving stated goals, and are things going well? And this is often what we focus on. But you need to pay attention to these three things. You're monitoring yourself, your personal reasons, you're monitoring the forces outside of the company, which management of the company can't control. And then, of course, you're staying on top of the company, and because you developed an investment thesis and you're seeing if that's playing out, and are you satisfied with management and so forth. Rick Rule says that you shouldn't even be in this sector unless you're willing to devote at least 1 hour every month, every 30 days, to staying on top of your positions. In my experience, and I tend to bet bigger on fewer companies, that is not enough time at all, because even digesting some of these press releases, that could be a 45-minute to hour endeavor just in and of itself. And then when I've held meaningful positions, I would call other shareholders or call a board member or somebody, and I'd have a 2-hour conversation about that. That's just in one day, a 2-hour conversation, let alone the time I'm thinking about how I'm going to manage this investment. Do I want to stay in it? How I'm going to play it? So minimally, Rick says an hour every month. I would say 5 hours every month if you're really going to be in the sector. If you're going to have 15 positions in this sector, assuming it's meaningful money, 5 hours, 45 hours, that would be 75 hours a month, 15 times 5. So that's just my thought. If you're going to take this seriously, maybe you don't have that time to devote this to this sector, and you rely on advisors, and so be it. You'll rise or fall on the advice of a newsletter writer or somebody that you rely on for the stock pick. But the big money is going to be made when you rely on yourself and your own decisions. Let's get into personal reasons for selling. You could sell for personal reasons because you have certain guidelines or rules of thumb that you've come up with. And these are kind of like, if you think of bumper bowling, when I take my younger kids bowling, we would put the bumpers in the gutter so that the ball would just bounce back and forth down the lane, so they'd strike at least one pin down. Well, your guidelines or your rule of thumbs are there. They may at times prevent you from making as much money as you should. However, they'll stop you from getting those gutter balls and some of those catastrophic losses. You could have a stop loss trigger. I know people that set a 35-40% stop loss on their junior mining stocks. And if it goes down that much, they just sell. I know others that say, I'm going to sell half at a triple, because then I'll have enough money to pay capital gains tax, and then I'll let the other half just ride and see what happens. Others will, and this is advice that was given to me, which I actually think is a really good rule of thumb, is sell an advanced explorer when the market cap is 20% of the gross metal value in the ground. So if at current spot prices in a given metal, with the current resource the company has, it's the resource times the spot price is $1 billion. That would mean when the company reaches about a 200 million market cap, sell it, because it could be indicating that it's getting close to the peak of that first hump on the Lassonde curve before it goes into delineation and economic studies, and some of the luster and excitement of the stock wears off, and it's going to go into a multi-year phase of engineering that investors sometimes don't care as much about. And then there's concerns about how are they going to finance, how much dilution, when will this come into production. So you want to sell before then, especially if you've been in the stock for a number of years. And a good rule of thumb is when the market cap reaches 20% of the gross metal value, the known gross metal value in the ground. Another rule of thumb, I know some people that will sell no matter what for a junior at a $500 million market cap, as just a rule of thumb. When you do that, you miss out on stories like Great Bear and others, but it also keeps you from those nasty pullbacks to where it goes from $800 million market cap down to a $200 million market cap. So you have to come up with some rule of thumbs. David Erfley, who's been on the show, he says that he develops them, and even if while utilizing them, he doesn't make as much money on a certain stock, it protects his losses. So you could sell for personal reasons, which I would consider your personal rule of thumbs or guidelines such. The next personal reason is you don't know why you bought the stock in the first place. So in this case, just sell it because due to your ignorance and lack of due diligence, you should have never bought the stock in the first place. You sell it, or you put in the work to learn why you own it and then determine if you want to own it. Let's move on to the third personal reason. Life circumstances come into play and you just need to sell. Maybe your situation changes and you can't tolerate the risk inherent in junior mining stock speculation, so you need to sell. If junior mining stocks and potential losses are hurting your relationship with your loved ones and those in your network, relational network, I would just say sell and move on. Maybe you have to buy a house. I know friends that have captured profits in junior mining stocks because they needed to sell to buy a house, and then the market turned over, and then in hindsight they're like, wow, I was thankful I sold to raise capital for my house at that point because that saved me a lot. I know of people, even executives in the sector, that have gotten divorced, and as part of the divorce settlement, then they needed to sell stock in order to pay their spouse as part of their divorce settlement. There's so many things to learn in the sector. As I'm talking now, I'm thinking of a different situation in which I was invested in an earlier stage explorer, and there was a lot of pressure on the stock. And I was like, man, where's all this downward pressure coming from? Well, two things were occurring. Number one, the drillers for that drill season were paid half in cash, half in stock, which I didn't know at the time. So I got that information from management, which kind of explained part of the downward pressure. But the other part was one of the lead executives and early founders who owned a lot of shares in the company. He was recently divorced, and so his wife was taking half of her shares that she got from him and was just pounding it in the market. She didn't care about this company. She just wanted to turn this little junior gold explorer stock into cash. And so with the driller selling and with the ex-wife selling, it put a lot of downward pressure on the stock. So that's something you want to be aware of from an investor standpoint. Just if you see an executive get a divorce, you should pay attention to that because you could have 4 million shares hitting the market in the next 6 months as the ex-spouse begins to sell. So people sell for a variety of reasons. You might sell for a variety of reasons. The fourth personal reason is, of course, tax ramifications. You might sell a winner to offset a loser for tax purposes. You might sell before there's a capital gains tax increase. Some ultra high net worth people in Canada this year, due to some changes, have been having to decide what they're going to do with that. and you might sell due to the reorganizing of your estate for tax purposes. So what we're pointing out here is there's all sorts of reasons, even all sorts of personal reasons why you might sell. This is a non-exhaustive list even of the personal reasons. But we're going to move on to some of the macro reasons, the bigger picture reasons, or the reasons external to the company. And the first one that we'll talk about here, and it's point number 5 of our 12, is the political environment becomes unfavorable to hold given stock. And on the screen here for viewers, I have a chart of Trilogy Metals, one of the first few sponsors of this show. And back in 2019, this stock was trading above $3 US. As I chat to you today, it's below 50 cents US. Not because the resource isn't there, not because management didn't do a good job with things, but because the Biden administration and a radical Department of Interior secretary revoked a permit for the Ambler Access Road that the company achieved after a 5-year consultation process, after a 1,500-page report, and a successful issuance of the permit under the Trump administration. A radical secretary in the Biden administration basically unilaterally revoked the given permit, which means all of that mineralization is not going to be able to be accessed for economic extraction purposes. Therefore, the whole investment thesis of the company collapsed. Again, not due to personal reasons, not due to company-specific reasons, but due to some external factor. And this could be a reason why you want to sell. Even as I begrudge what they did to the company, the reality is when something like this happens, you might want to just cut your losses unless the company comes up with something else, a different project in a different location, or they have something else going for them. That would be a reason why you'd want to stay with the company. The 6th reason is that the commodity fundamentals turn bearish. I have a chart for viewers of Lithium Americas Corp. A year ago, when lithium was hotter, the stock was trading over $10 a share US. Right now, it's trading closer to $3. So that's 65 to 70% sell-off. A lot of that has to do with the lithium price. So when the commodity turns over and sentiment turns more neutral or bearish from being hot or ultra hot, that could be a reason to take your profits, because these things can sell off 50 to 70% quickly. The 7th reason, we're still talking about macro or external reasons for selling a junior mining stock, could be that the market sentiment is not supportive of small cap speculation. If it's a risk off environment, you might not want to be in risky stocks unless it's a well-funded stock or it's a stock that's outperforming its peers in terms of interest and possible funding sources. So if it's a risk-off environment, you're probably better to stay clear unless you can truly find the best of the best that garner market attention. And in my observation, when it comes to junior mining stocks, that often has to do with a good exploration story, or even a pre-production going into production story that is newer or fresher to the market. I don't think I've seen, that I can recall right now as I'm speaking, an old story that may get revalued higher in a bull market, but not as high as it was in the previous market, really get any love in a difficult market for small cap stocks when it's risk off. It's more of those newer exploration stories. There's something here. We don't know how big it's going to be. The allure and the mystery of how big this could be versus the history of a prior deposit and, that thing again. Yeah, we don't want to put our money into that because it doesn't have the excitement or the unknown factor to it. So if market sentiment's not supportive of small cap speculation, you may want to trim your positions. The 8th reason why you might want to sell a junior mining stock is because there's better money-making opportunities that are being presented to you. So you could be in a copper junior, but you've concluded this copper junior, even though you've made money on it, is no longer the best opportunity for you to continue to make money. Now, when I would sell, if I would sell, I'd always factor in my tax ramifications for that, especially if I'm selling in under a year where the tax rate, short-term capital gains, you're taxed higher than you are long-term capital gains if you hold over a year in the States. So that thinking process factors in, but that's basically what you want to ask yourself. If you have substantial profits in a stock or even losses in a stock, don't hold it just because. Just say, if I'm going to be in a uranium junior, is this the best opportunity within the uranium juniors that I have? Or are there other investment opportunities that would provide me a better opportunity and a better upside? Also, you could be presented with business opportunities. I sold stock, trimmed some of my positions earlier this year because I started a new business with my 18-year-old, 17-year-old, almost 13-year-old, and almost 11-year-old sons, because I wanted to teach them about business. And my eldest said, "Dad, I want to make adult money." So I sold a substantial amount of stock, and I'm investing it in myself. I'm investing it in something that I can control. And I even thought about the dynamics of this to where I would get frustrated with some of the executives of some of the companies I was getting in. And I said, okay, well, I'm going to take that same money and I'm going to bet on myself. And I'm going to teach my kids business. It'll be part of their learning. And hopefully I can help them make adult type of money even when they're 19, 20, 21. Or in the case of my younger sons, when they're 14, 15, 16, 17, work in the business. I invested in trucks, I invested in equipment. So it's like tangible stuff that even if the business fails, there's still value there. I told my wife it's actually probably less risky than these junior mining stocks, which can go to zero quickly. Like I have physical assets I can use or sell to somebody else and get to teach my kids business in the process. And it's a very capital intensive business startup. So it required capital. And that's one of the hurdles or the moats of the business. And it's a high-end rental business. I'm not sharing the details, both for privacy and competitive reasons, but that's just in my own life. That's why I sold some stock. So if you say, well, do you want to always tell when you sell? Well, like I sell for personal reasons, just like you do. I sell for reasons external to whether the company is going to be successful or not, just like you do. So this is what goes into the decision-making process to sell a certain stock. Let's get into company-specific reasons, because this is often what you focus on, but I wanted to point out that those personal and those external to the company forces are also at work when you factor in the decision to sell a junior mining stock. This is what Rick says. You sell a junior mining stock, Rick ruled that is, you sell a junior mining stock when the reason for which you originally bought the stock no longer exists. So that presupposes that you actually understand what you bought and why you bought. And a simple test you can do with yourself is ask yourself, what are the 3 things that would make the stock go up? What are the 3 things most likely to prevent the stock from going up? Can I explain the investment thesis of this company in 90 seconds or less, simplistically, to somebody who does not understand the mining sector? And if you can't do that, you probably should not own the stock. So if the reason for which you originally bought the stock disappears or no longer exists, you probably want to sell it. Let's say you invested for an exploration program. The timeline was 18 to 24 months. They were capitalized at the time. They failed, and you don't like the new exploration project, or maybe the management that came in and took over the company, or maybe the new focus of the company, they've changed jurisdictions, or they changed deposit types, or they're starting afresh, and that's just not where you want your money. So you could sell for these reasons. The next reason, company specific, and again, this is non-exhaustive. There are a million reasons, company specific reasons why you want to sell. I'm just lifting up a few of them to help you think through your thought and develop your thought process if you haven't already. There's a no confidence vote in management after missed timelines, unattained projections, and failed execution. I spoke to a board member recently of a company that I'm invested in, and I said, you need to think through the no confidence vote you're getting from investors. And when you've disappointed and you haven't obtained even the things that you've laid out there, number one, you got nobody to blame but yourself. I know you have an explanation, or let's just say an excuse for those reasons. However, because of that, you've disappointed and you've lost investors that came into the stock. They're no longer willing to be patient for you. So you have to factor in that selling pressure. And then now you're going to go have to regain trust for those that are still in the stock that haven't sold. And you're going to go have to market and find new investors for the stock because you've disappointed a large segment. And that is a lot of inertia to overcome. And management may just focus on, I'm just going to focus on what I can control in terms of the objectives and advancing the company. It's like, hold on, you're a publicly traded company and you can't just be a turtle with your head in your shell or an ostrich with your head in the sand in terms of your share price, because unless you're a producer that can fully fund your growth, if you're going to go to the market and you're going to give equity kickers on debt, or you're going to issue new shares via a private placement in order to raise money, your currency that you need to manage is your share price. So you better be treating investors well. You better be communicating with them. And if you burned a lot of those investors, you just have to come to that acknowledgement, and then you better go find new investors and think about how you're going to communicate to them. And are you believable? And will they fund you to move the company forward? So perhaps you have a no confidence vote in a management team. It's time to sell, move on. And sometimes you can sell. And I've shared this before. I sold a little silver junior, 2019 or something like that, for 6 cents. My cost basis, buying it from low 20s down to 8 cents or something like that. It might have been, I don't remember, 12, 14 cents cost basis, sold it for a loss. My same friend bought it when it was 5, 6 cents. That thing ran to 85 cents. Okay. So I gave it a no confidence vote. My friend even told me, I think you sold for the right reasons with the knowledge, information you had at the time, Bill. And I bought for different reasons. And my entry point made sense at the time, and he killed it, and good for him. So another point, just because you lose money on a stock doesn't mean somebody else might make money on that stock. The 11th reason why you might sell a junior mining stock is that you've concluded the value creation by management for all shareholders will not exceed the ongoing dilution, especially when the dilution is very easy to see and it's built into the share structure or how they finance the company. If there's convertible debentures and there's a lot of shares out and you've concluded management is not developing enough value fast enough, then the conversion is just going to put such a downward pressure on the share price that even the funding that comes in through the convertible structure or the share dilution that comes in, the value creation is not going to outpace it. Therefore, it's going to be at best a hamster just spinning on the wheel, and it's not going to give you the ramp up in the share price that you originally invested for. Or there's a lot of in-the-money warrants where people are likely going to sell their existing share to then come back into the stock by funding the company through the in-the-money warrants. This can be a good thing if things are really going well and the stock is powering higher and there's excitement around the stock. This can be a good thing. The warrants fund the company without paying all these excessive broker fees. But when that doesn't happen, and if it's 25% in the money and investors are selling, booking some profit, and then coming back in through the warrants, that can really keep a downward pressure on the stock. And then you can kind of see when there's future financings coming by paying attention to what's in the treasury, or if you see press releases like we just filed a base shelf perspective, basically like we can raise, we got the approval to raise when we want to. Just be aware of those things. And especially for the silver bugs, I wanted to point this one out. When silver ramps up, there's not so many silver stocks, but many of them will do at-the-market offerings or at-the-market facilities to where the company is authorized to sell shares directly to investors. So we know in the public markets that one investor sells to another, but also be aware if a company has an at-the-market facility open to where they are selling shares into the market in order to raise money. And even if the market cap is going up, if they keep issuing shares, your value on a per share basis may not be going up or may be severely hampered. So you just want to just pay attention to those things. And you can even, especially you silver bugs, you want to pay attention to, and even the silver producers, mind you, that's what I'm referring to. I've seen the silver producers really pound the market by selling a lot of shares and dilute their shareholders that way. So you could sell if you think the value creation is not going to exceed the ongoing and the clearly expected dilution. The next reason is when you can see that there's going to be an obvious near-term pullback. It could be because you see a financing coming, the treasury is getting low, there's not a lot of near-term catalyst, the company is going to finance, perhaps that'd be a point where you'd want to sell, and if you like, after a pullback, buy it back. Or there's too big of a run-up too fast. I've seen this where the stock goes up 8-10 times, and I had a large position that went up 10 times in like 45 days or 60 days, and I didn't sell. Well, I'll tell you, I'll play that differently now. If I get a 10 bagger in 60 days again, I'm going to be selling into that. So when it runs up too fast, too quickly, you need to really think about, do you want to be selling into that volume? And remember, Rick Rule says he buys when it's easy to buy and he sells when it's easy to sell. So if it's going up on high volume, it's a good time to sell. If it's being ignored on low volume, maybe that's a good contrarian time to start buying. You may want to sell when you've learned the trading trend. I've been in stocks where I've held it for years and had meaningful positions, and then I've talked to some other people in the stock and they're like, yeah, I keep selling it at this price point and then it goes down 40% and I keep buying it back. And I've done that a few times, and pretty soon I'm going to have a free position because of the profits I've made just trading the trend. I got off the call. I'm like, yeah, he's probably smarter than me. Or I had too long of a perspective on the stock, and factoring in things like what Rick Rule says, that for every 10 bagger he's had, the stock drops by 50% at least twice on the way there. Like those truths are all true, but that doesn't mean if you have the right position size and you can take advantage of the market without being the market, where you could also profit off of those clearly defined trends if you've identified them. And in my experience, I'm not like a TA guy, technical analysis guy, but when you look at the stock and you follow the stock that you've been in on a daily basis, you can see that trend emerge. And perhaps that's something you want to sell into. That could be your 12th reason. An obvious near-term pullback might be a reason why you would sell a junior mining stock. And to conclude today's teaching, so there was a $500,000 missed opportunity I had a few years ago. I had a large position in a company that was about to ramp up production, and it was a production growth story. And this company was going to be financed by a bank that I thought very lowly of. And in having a large position, if you're an accredited investor, you could sell that position and then buy it back in the financing that the investment bank would be doing on behalf of the company. And then you get a warrant with that. Well, for this particular financing, the warrant was a tradable half warrant. So for every unit or share that I bought, I would get a half warrant that was immediately tradable on the exchange. So I didn't need to, let's say the warrant was in the money, I didn't need to put up actual cash in order to exercise the warrant, which would be a share would be created, sent to me, and then I have to sell that share in order to capture the profit. If it's a tradable warrant on the exchange, it's basically a call option. And so you get the time value and then you get the intrinsic value that you can access as an investor by just selling it. So if I would have done that if I would have sold my position, which I didn't because I didn't like the bank, and because I had a negative experience supporting a company by selling my position, buying it back in a financing multiple times at their request, and then loading up on a bunch of warrants that are behind me in the file cabinets behind me here that are completely worthless today. But I decided, even when I was going through some of my files, like, do I throw these away or do I keep them? I'm like, oh, I'm going to keep them. Maybe I'll frame them at some point and put them on my wall, just, a wall of remembrance to cause you to think about how you go about investing in this sector. But with those two factors, I did not take advantage of this opportunity, which I could have. And within just a few months after that financing closed, with my position size, I would have been able to sell the tradable warrants at market for $500,000 gain. And I didn't take advantage of it because of the two reasons I just told you. But then as I was thinking about that, I was like, man, just because you had a bad experience doing it in the past doesn't mean you couldn't have a positive experience again. And then after talking to a number of people who have been in this sector decades upon decades, it is the way it is. Like, there's no perfect junior mining investment. The banks are what the banks are. You just have to know who you're dealing with, and you have to understand the company and the management of the company and your investment thesis. Once you understand all these things, you have to play it to your advantage, and you have to play it so that you can make money amidst the shark-infested waters. And this is what I was trying to tell you up front, is that there's nobody, including me, that's 100% aligned with you. You are 100% aligned with you. And so you have to protect what is yours. And if you're going to be in this risky market in which there are characters that want to take advantage, then you have to know how the game is played and then play it to your advantage. Well, if I get this opportunity again, especially with immediately free trading warrant, I'm going to do it, because why leave all that money on the table? It's a learning process. I'm in my 9th year at this. I've made some money, but I'm constantly assessing my own emotions. I'm constantly looking at the bigger macro factors external to the companies that I invest in. And then I'm staying on top of the companies I invest in and asking myself, do I want to continue to stay in this company? So hopefully this monologue helped you think through the reasons why you might want to sell a junior mining stock. I wish you all the best. Thanks for listening to the show, and I'll catch you on the next one. Bill Powers, signing off.